if Trump undermines the Fed, with gold, at 5,000 is a ridiculously low price. It's just stupid, idiotic low. Hi, it's Mike and Alan once again with the GoldSilver Show. Alan, what have you got for me?
Hey, Mike. Yes, I got a great presentation on gold. It's looking like Goldman Sachs is admitting that gold could hit $5,000 an ounce if some pretty modest conditions are met. So let's take a look here. An article in the Financial Times. Gold could hit nearly $5,000 an ounce if Trump undermines the Fed, according to Goldman Sachs. The president's attack on the U.S. central bank will erode the dollar's reserve status and extend the precious metals rally, according to analysts. So what do you think about this headline, Mike?
Well, I think actually it's if Trump undermines the Fed, with gold, at 5,000 is a ridiculously low price. It's just stupid, idiotic low. You have to put a 1, a 2, maybe even another 5 in front of that 5,000. But the very fact that they are saying this, and John Paulson just said $5,000 an ounce, and JP Morgan just said $5,000 an ounce, and people are reading it. So Goldman Sachs is finally woken up. I was saying, my analysis in my first book, I had 3 different ways of looking at it, and I came up with a range of the low 6,000s to the mid 6,000s. But that was back then when the debt was so small, and when the dollar was, in a much better position. But the main thing here is that Goldman Sachs is writing positive stuff about gold. They were so negative on gold when gold was $700 an ounce, $400 an ounce. That's when, no, you don't want any gold. You want what we sell. Now, gold has proven them so wrong. All these people, JP Morgan, Goldman Sachs, they are so incredibly wrong year after year after year. And now they're jumping on the bandwagon here because they're looking like idiots. But the fact that they are saying this, even if Trump does nothing, could cause gold to go to $5,000 an ounce. If Trump does something that undermines the Fed, $5,000 an ounce is an absolutely idiotic prediction. It is absurdly low.
Yes.
So that's my comment.
I agree completely. And wait until you see the logic that they use, the numbers that went into it. You're still going to continue to think it's a low estimate. So,
okay,
just
hit me.
Just one of the sentences here. This isn't quite the one I'm talking about. Gold prices could climb to almost $5,000 an ounce if Donald Trump's attacks on the Federal Reserve damage the U.S. central bank's independence, Goldman Sachs has predicted. Okay, so that's basically the same as the headline. The other data point that's interesting here, if 1% of the privately owned U.S. Treasury market were to flow to gold, the gold price would rise to nearly $5,000 per troy ounce. 1%.
1%. Well, first of all, if anybody that bought the Great Gold and Silver Rush of the 21st century, and they've read the chapter on Giffen goods and about the panic that happened back in 1979, first month of 1980, and then the differences between the bull market of the 70s and today, if 1% start going toward gold and it goes toward $5,000 an ounce quickly, then 2% are going to go, 3%. And then there's going to be a rush of a whole bunch of other people where it's not treasuries that they're selling, it's other things that they're selling. It'll be stocks and real estate, and everybody starts to gravitate toward the thing that's going up fastest, toward the thing that is the ultimate safe haven investment, especially in turbulent times, war, all of this stuff, when the public comes rushing in, and they're not right now. The price has been going up, but it's been driven by the East, by Asia. It's not the U.S. and Europe and Australia and so on. It's not the West doing this. It's the East that's been causing the $1,000, the 48% price increase in gold this year so far in just 9 months. It's when the U.S. does come rushing in, and they will, then we're going to see some real fireworks. But right now, Asia has lit the fuse, and this is part of lighting the fuse. Goldman Sachs writing this stuff, JP Morgan writing this stuff, and big successful investors like Paulson writing this stuff. Now that it's getting out into common public knowledge, but I want to, again, my predictions on this were 17 years ago. And it's better to buy gold at $400, $500, $600, $700 an ounce than at $3,600 an ounce. But it's not too late. $3,600 is going to look like a great price. You're going to look brilliant in the future when it's 5,000 with some other digit in front of that 5,000.
Yeah.
Do you agree?
I do agree for sure. Yeah. I think 5,000 it's too low to even be the low end of a reasonable estimate. It's way too low. So
exactly.
Yeah. Should be at least double. You got to have a 5-figure gold price or you're not even in the ballpark. So
I agree.
Yeah. So one of these components that they're getting at here is Trump basically pressuring the Fed to lower rates. Okay. And so I saw this chart from Katuza Research. Fed rate cuts are gold's rocket fuel. They print, gold wins every single time. So
yep,
you can see here that for these rate cutting cycles, gold has performed extremely well, 118% during and after a cutting cycle. And that's just a few years. Another 35% in the next cutting cycle. And if we get another one right now, or continue it, you might say, that's rocket fuel for gold.
Yeah, and we're already going north because of Asia. And if we start buying, Asia is good. Now, I want to remind everybody, if they really need, a lot of people viewing this have read The Great Gold and Silver Rush of the 21st Century. But in the first bull market in the 70s, it was a very small percentage of the world's population. It was like 5% for the first half of the 70s. And then from 75 to 80, it was about 10% of the world's population. This time, it's that same percentage plus all of it. I mean, it's everybody except North Korea participating this time. And so it's complete. When people say, oh, this time it's different, with gold and silver, it's the only time that statement is true. This time it is different, really different. And you need to read the book to be able to see. I mean, you and I spent 4 years researching this, and you and I know that this time it's really different.
Yes, it will be amplified.
Yes.
It will be amplified. So yeah, one chart that I put together, not for the book, but after the fact, is this chart right here. I got curious about how real interest rates affect gold's bull markets. And you can see going back to 1960, really the two bull markets we've had in gold, that of the 1970s and then that of this century, which are in the red boxes here, they sit on top of these red stalactites here, which basically indicate negative real rates. So that's the Fed funds rate minus the CPI. And so when that difference is negative, gold is in a bull market. And so if we get some rate cuts, that's only going to exacerbate this and take those real rates negative. It's rocket fuel for gold.
I'd like to ask you a favor for a future video. Can you do this same chart for a future video and insert a third data set, the third column because you've got gold price here. Oh, you'd have gold price, rates, and the CPI to create the negative real rates. So you've already got 3, but add one more column of the shadow government statistics alternate CPI, which I keep on reminding people, it's not like conspiracy theory stuff. It is government numbers. It's the CPI as used from World War II to 1982. So it's just the way the government used to measure consumer price index and make, you've got red. It would be good to add some more stuff. So you need colors, but remember, people that are color challenged, it's red, green. So you don't want to use both those colors on the same chart. But I want to point out, the first half of the 70s bull market, we were in positive rates. But that portion of the gold rising, was from the date that Nixon took us off of the Bretton Woods system, but it was still illegal for Americans to buy gold. It was only Western Europe and Canada participating. Australians couldn't buy. American citizens couldn't buy. There were no markets in the USSR, so everything inside the Iron Curtain, all those countries, China under Mao, they could not participate at all. And so that was the only area during these red boxes that you've pointed out where it's predominantly negative interest rates. Once the US joined the party and Australia joined the party in the 70s, which happened the first day of 1975, we were in this negative real rates territory, and we stayed there until gold peaked. And the second that they cut rates, we are in that negative real rate territory. We're it doesn't show us being in it right now, but we probably really are. I would love to see this with shadow government statistics, alternate CPI. And we might want to do a column that averages the two, because I do think the truth lies somewhere in the middle of the old government numbers, the original CPI, and the new CP lie. And so it'd be neat to have our own inflation indicator, the GoldSilver.com inflation indicator that's just averaging the two, previous government numbers, new government numbers.
Yeah. I think if I adjusted it here, we might not have positive rates at all in this red box. They might all be significantly negative down here. So
I think you are absolutely correct.
Yeah. So I'll do that for a future video.
Okay, awesome. Thanks.
So last thing I have here is actually a comment from a viewer, Jim Mervin. Thank you, Jim. Financial meltdown in 3, 2, 1.
Okay. The financial meltdown is actually the financial countdown for the rocket ship that is gold. I want to thank you for the presentation and thank everybody for watching.
Invest and earn up to $2,000 in bonus silver at GoldSilver.com. It's easy. Step 1. Open any GoldSilver storage account excluding IRAs. Step 2. Purchase your precious metals. Step 3. Get up to $2,000 in bonus silver dropped straight into your vault. Visit GoldSilver.com/free silver to claim your silver.